Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Asia podcast. I'm Doug Krisner. You can join Brian Curtis and myself for the stories making news and moving markets in the APAC region. You can subscribe to the show anywhere you get your podcast and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.
Let's get to our guest. It's Melissa Otto, head of TMT Research at S&P Global Visible Alpha. Melissa, thank you for joining us. Well, markets are showing that they're pretty jittery here at the moment. We did have jobless claims rising 14,000 to 249,000. That in itself is probably not enough, and maybe even the manufacturing numbers not enough. It seems like it might be more thinking that these are examples that the Fed could be falling behind the curve on cutting interest rates. How do you see the balance of risk here?
Thank you. Indeed, it's been a tumultuous earnings season so far, particularly for the Megacap tech stocks. I mean, tonight we saw really a tale of two cities, but even for Apple, who put up, an inline quarter, gave a decent outlook, both in line with expectations with the stock flat. Then Amazon, stock down over 5%, revenue and operating profit beating expectations in the quarter, but that guidance a little bit light of expectations took the stock down. I think in terms of where the Fed comes out on this, it's a close call. S&P Global Market Intelligence had been calling for a December rate cut, but, looking at the data, acknowledges that, maybe September is starting to look a little bit like it's coming on the table. Hard to call at this point.
So when you look at the themes here, I mean, what jumps off the page is artificial intelligence. How do you see this bet right now? I mean, is it something where we can expect more air to come out of I don't want to call it a bubble necessarily, but a pocket of enthusiasm?
It's a long-term secular trend. And I think a lot of the growth, we saw it really come into earnings revisions pretty aggressively, because what happened earlier this year was cloud service providers started to really ratchet up their CapEx. That CapEx ultimately led to earnings revisions at NVIDIA. And investors started to say, well, who else is going to benefit from generative AI? Where may we see these sorts of earnings revisions, and especially to the magnitude that we've seen at NVIDIA? And so I think those revisions started to get put into the market, started to come into some of these mega cap stocks. And I think what's starting to happen now is we're seeing a normalization of those expectations as the realities of what the market is actually going to do, what it's going to deliver, is starting to come to fruition.
Yeah, when you think about it, the valuations are pretty high on these companies, and the hopium is pretty high too. That's tied to AI, as Doug mentioned. And then, you look at some of these statements like out of Amazon, the earnings actually wasn't so bad, but Amazon is saying that profits will take a back seat for now to heavy spending on AI. So you also have spending levels that investors are fretting with, and you add it all up and it's just kind of like, well, let's trim here.
Yeah, I think that's a fair assessment. We've seen CapEx ratcheting up across the board for all of the mega cap stocks, particularly in the cloud service providers. Meta was probably the rare example that didn't exceed expectations in terms of their CapEx, but broadly speaking, they're still spending a lot, and the overall space is spending a lot. So I think the one beneficiary of this is probably NVIDIA at the end of the day. That is probably not going to slow down.
So when you look at the content that's being created by companies in the media space using technology, telecom providers as well that may benefit a little bit from this, I'm wondering about the degree to which there's going to be pressure on ad sales going forward. And maybe you can take us back to what we learned this week from Meta Platforms. What do you see when you look at the ad spending business?
Yeah, it's an interesting backdrop, because we saw softness at YouTube. Those numbers came in lower than expectations. Netflix is saying that their ads business is off to a slow start. But then Meta actually had a pretty good quarter. They're actually doing pretty well. And I think there is there are very different business models. So the businesses that are aligning and adhering to certain aspects of what a customer wants, they're curating it, they're leveraging their AI in a way that's aligning ads in a way that's creating better curation. It seems to be resonating. We're seeing that in the numbers.
So I want to swing it around to the jobs data because we've seen a lot of volatility here. I mean, we might very well see volatility to the upside if you get a solid number there. One of the first questions I asked yesterday after the Fed meeting to our multiple guests on the program was, didn't Jerome Powell sound pretty positive? To me, that was a key thing. He was like, this economy is humming. It is not anywhere close to falling off the table. And now we get some disappointing news and investors react as though it is falling off the table. So what are you expecting with jobs?
It's hard to call it at this point. I think there is some seasonality, and we will just really need to look at the sequential data as it comes out and hear the further commentary that he gives. And I think it'll be interesting to see how they position over the next couple of weeks and what sort of additional feedback we get. But yeah, I mean, it wasn't a bright spot today for sure, and it certainly spooked the market.
And clearly, when you look at the Intel news after the bell, 15,000 workers, that's 15% of Intel's global workforce. What do you think of a company like Intel in an environment where semiconductors have really been kind of at the front end of this trade in artificial intelligence?
Intel is in an unusual position. They have probably not innovated in the same way or invested in the same way that we've seen at the megacap companies, and may have fallen behind in a couple of key areas. And we're seeing that come to roost, particularly in the quarter today. One of the other things, I'll go back to your earlier question about the jobs number and about the consumer. One of the things that Tim Cook did call out is how consumers are just incredibly deal sensitive, that they are really looking at promotions. They're very price sensitive. They're avoiding some of the higher ticket items. There is some indications of that. So there does seem to be some sensitivity at the consumer level.
All right, Melissa, thanks so much for joining us. Back to Intel for a moment. The previous question, that stock is now down more than 50% year to date. It's a really interesting story because they're trying to reshore in the United States, and that elevates the cost levels for sure. And now all of a sudden they're having to try to really cut costs. So it's one that we'll be watching closely. Melissa Otto has been with us here. She's with S&P Global Visible Alpha. This is Bloomberg. Joined by Mark Gurman now, Bloomberg chief correspondent on global technology, for a closer look at Apple earnings. So we focus on China because, this is Bloomberg Daybreak Asia. We had revenue down 6.5% to $14.7 billion in the third quarter. That was short of the $15.3 billion. So in all, it sounds like a lot, but it's not very much when you compare it to overall sales of $85.8 billion, almost a rounding error. Things are looking pretty good for Apple. Is that fair to say, or is China a major drag?
I mean, obviously the third quarter, that's finished, and the results we got today are a picture in time of how Apple is doing financially. So if you look at that 90-day period, I think they did really good. China aside, that is still $1 billion annual decline. It's a little bit better than they did in the first half of the year in China, so you are seeing some improvement there. The iPhone did decline about 1%. It could have been worse, certainly should have, and could have been better. The one thing they didn't talk about was guidance for the fourth quarter in terms of the iPhone. The new iPhone is going to go on sale at the tail end of Q4, sometime in the second half of September. And they didn't say if the iPhone revenue is going to accelerate, decelerate, be in line. So that makes me think that it's going to basically be stagnant on an annual basis, which of course is not the end of the world. But here they are hyping Apple Intelligence and how this is going to drive iPhone sales and a new super cycle and such. But I don't believe that is going to happen. My other takeaway is not much talk about the Vision Pro. This just launched internationally. This is their first new product category in a decade. Way overpriced. It's a cumbersome product. It takes a lot of energy to actually use it. I was actually using it last night. It was kind of painful. And that's something that they need to address. Where is the innovation? Where is the future of this company? Because I certainly think they're lagging in AI, and I certainly think that their first take at VR is simply not it.
Do you think there's a danger that Apple is overly optimistic about its future in China, particularly when you look at the competition there, and you also look at the fact that Apple Intelligence will not be available in China, at least immediately? Is Cook overly optimistic?
I think that there's what they say publicly, and there's what they feel in their private time, right, at the office. And I think there is quite a bit big of a difference, right? I mean, publicly, he's going to say all the right things. They're incredibly reliant on China. He needs to say that they have a very strong relationship with China from a production standpoint. Still, the vast majority of products are produced at Foxconn across the greater China area. At the same time, their actions tell a different story. Opening new retail stores in Southeast Asia, putting a lot of prominence on moving production to Malaysia, Vietnam, and most notably India, right? And so, like I said, there's what they say and there's how they feel. And if you go by their actions, we actually know how they feel, which is, this China thing could be running into a wall at some point.
Yeah, they talked up Malaysia. And when I saw that, I thought, oh, boy, you're talking up Malaysia. That's kind of interesting. Small country. Anyway, we talked about overconfidence. The market itself seems a bit overconfident on Apple. If you look at profit up 8% in this last quarter, it's tough to match that up against a forward PE of 30. It means that there's a lot of hope that Apple will sell a lot more phones because of AI. So we need to ask you, is AI that great in Apple Intelligence that people will buy a lot of phones? No.
Okay. No. I've been playing with Apple Intelligence, the initial beta version for developers over the last week or so. There's nothing that I'm seeing here that provides a compelling reason to update, and I truly mean that. I think if you're going to see AI-induced upgrades, that's something that's going to happen in the second half of next year, when you have sort of the full scope of those changes, right? Based on the earnings call and the questions that were being asked by analysts, one, I don't believe they understand how and when Apple Intelligence is actually rolling out, and I don't believe they've actually used it. So maybe if you're going to get on an Apple earnings call, you probably want to do that. To me, you have really nice writing tools, so it can rewrite paragraphs and essays for you, make things either sound more friendly or more professional. So that's new. There's proofreading, which we've had in Microsoft Word and Apple's own iWork pages for multiple decades. The best feature of Apple Intelligence is being able to record phone calls. Whether or not you're allowed to do that in whatever country or state you're in is another question. And then at the end, it can pop out a summary of everything that was discussed. So that's pretty nifty. Yeah. But the other stuff is very much par for the course. Not a lot of reason to buy a new phone, if you ask me.
So you make an interesting point where you were able to access the beta version of Apple Intelligence. I think a lot of the other software developers were able to get a peek at this too. Talk to us about the degree to which Apple is really banking on those relationships to drive innovation in Apple Intelligence. It's the app developers, right?
They are banking heavily on this app ecosystem and this app paradigm. And why wouldn't they? They made $24 billion in the third quarter, mostly due to the App Store, and that's the services number. I have to tell you, though, I really think the industry is shifting away from this app paradigm where you go into an app, you launch the app, and I think it's moving way more towards deeply integrated AI and cloud. And I think over time they're going to have to move away from this paradigm. So they're banking on, I think, an aging idea. It's interesting because Tim Cook said it's now in the hands of developers, which is true, and he wants to see what developers make with it. But in order for developers to integrate AI and Apple Intelligence into their applications, there have to be frameworks and developer tools available to do so.
Yeah.
And to date, they haven't released any of those frameworks to developers.
All right, Mark, thank you for joining us. Mark Gurman, Bloomberg Chief Correspondent on Global Technology.
After the bell, we heard from Amazon, and the company reported quarterly sales pretty much in line with estimates. However, at the same time, Amazon projected profit for the current quarter well below estimates. The message seems to be profits are going to take a backseat while the company spends heavily on artificial intelligence. Let's take a closer look now with Bloomberg's Spencer Soper. He is our e-commerce reporter joining us from Seattle. Good of you to join us, Spencer. I'm sure it's been a busy day for you. This seems slightly reminiscent of the best Jeff Bezos days in the early days, right? Where you spend at the expense of profits. Is that the way you see it?
Yeah, that's pretty much been the constant push and pull between Amazon and the investment community. It's just now it's happening under Jassy instead of current CEO Andy Jassy instead of founder Jeff Bezos. And Jassy made the case to investors on the earnings call why he thinks this is such a big opportunity and why Amazon needs to spend now so that it can meet demand down the road. And the CFO even said, look, this is a good indicator. It's good that we expect our business to grow this much and that we're investing in it now. But yeah, there's still just some skepticism in the investment community about all of this artificial intelligence infrastructure investment and when it could pay off.
And to a degree, it's already paying off because you did have a beat on AWS, which I think a lot of analysts have been really focusing on that issue, maybe up more than the 17 and change percent that was expected. So you get it up 19%, but just that it was overshadowed. Yeah,
and you have to peel apart AWS's performance from artificial intelligence investments and future growth and its core business of just cloud computing and data centers that are accessed via the internet, because that's still a very big business as well. And what they were saying is that, folks that had kind of hit the pause on those migrations, from having their own data centers to using Amazon Web Services data centers, that folks kind of stepped that back up, that their customers were back in an investment mode and doing that after a pause. So that was part of the AWS beat. And then on the miss, you have to look at some softness and some concerns around the consumer for Amazon's core e-commerce business. Let's not forget they make most of their money, selling things online, and that's showing some signs of weakness from the consumer. People are trading down, buying cheaper things, and so that is affecting their outlook and profitability.
I go back to Bezos again. One of his great sayings: "Your margin is my opportunity." How are the margins holding up for Amazon right now on the retail side, the online retail business?
That they're saying is doing okay, and the danger. So they're making improvements in efficiency, which is helping the margins. But then when you have people trading down and buying cheaper goods, generally a cheaper product that's the same size as a more expensive product is still cost the same amount to put it in a box and get it to your house. So that's the margin pressure there. That's kind of offsetting the progress they're making on improving efficiency. So there's some push and pull there as well. And I think investors are probably just worried that the consumer sentiment that could last. And Amazon even hinted at that, saying it's just very difficult to forecast right now. And they mentioned just a lot of what they described as distractions with like the election in the US and the Summer Olympics.
On e-commerce, a lot of competition from AliExpress and some of the other Chinese players like Shein.
Yeah, you're definitely seeing stepped up competition in domestically from the likes of Walmart. It has a better e-commerce game and is offering Amazon-like subscriptions. And then, you're also seeing this factory direct model from companies like Temu and Shein that's really making inroads because it's a it can be a quite staggering price difference if you find just some kind of generic product on Amazon and then cross-reference and find the same thing on Temu. You might wait a few more days to get it, but you can save a lot of money. I mean, the difference can be like 50, 75% in price.
Hey, Spencer, thank you so much for making time to chat with us about Amazon. Spencer Soper there, Bloomberg e-commerce reporter, joining us from Seattle here on Daybreak Asia.
Joining us now on the program is Mark Matthews, head of Asia Research at Julius Baer, to talk about markets. Mark, the markets are pretty jittery here at the moment. We've seen some pretty big sell-offs on stocks. Do you see that as tied to valuation more, or to maybe now fears that growth is slowing, not only in the U.S. but elsewhere?
Brian, I think it's very much the first one, and it's very much concentrated in the technology sector. And a big story has emerged around the investments that big technology companies are making to get ready for the new AI world. And I think they're kind of darned if they do and darned if they don't, because on the one hand, if they don't make these investments in AI, they'll be seen as failing to innovate and, on their way to becoming like a Kodak or a Blockbuster. On the other hand, if they do make these big investments, then they'll be seen as putting capital at risk for something that's a big unknown. And that, I think, is what's causing the volatility. If you exclude technology, the rest of the market, in my mind, is pretty solid.
Yeah, it held up remarkably well. And I'm wondering if this narrative having to do with the Fed being behind the curve potentially is a little overblown. Would you say that's possible?
I would. I mean, the first thing I would say is there are many recessions that were forecast that never happened, but there were equally as many recessions that did happen that weren't forecast. So we're notoriously bad at predicting recessions. But to the best of my ability, I don't see one on the horizon. We're looking at GDP growth above 2% in the U.S. next year. I know there was a lot of noise around that ISM manufacturing PMI number for July that came out last night at 46.8.
Yeah.
But I just point out that number was around 46 all of last year. We didn't have a recession this year. Manufacturing has not been the driver of the economy for the last few years. It's less than 10% of GDP, 8% of employment. From what I can see, the economy is still strong.
Yeah, and that's what we heard from the Fed chief yesterday. He was actually quite strident in talking about how growth was pretty solid. I'm imagining that you're somebody who really likes the breadth that we've seen of late in markets. Do you think that is maybe questioned a little bit here, given that the market seems to be suggesting that growth is falling off?
Brian, we've done studies on breadth, and it doesn't appear to be a leading indicator for the end of bull markets. And so I know it sounds counterintuitive when you have, less and less stocks driving the market higher. That should be a signal the bull market's coming to an end. In fact, it's not true, but now we're getting a broadening in the stocks participating. You can't say it's a bad thing. I think it probably is telling you something about the economy, in the sense that there are more cyclical stocks like the home builders that are starting to break higher. So the S&P did tremendously well up until July. In fact, in the last 30 years, there were only 3 years that did better until the middle of July. And what I noticed is that each of those 3 years then had a pullback throughout the remainder of July and August. One of them, actually, the pullback lasted up until October. And then they rallied into the end of the year. So we think that we're in a bull market, but of course they don't go up in a straight line. We are in the midst of a correction now. I would be surprised if the correction's over. Mm-hmm. Hard to predict these things, but I'd be surprised.
I'm wondering if you could say the same thing about the Japanese equity market. We're seeing the Nikkei take it on the chin today. We're down about 4.8% at the moment. I ran the chart for the yen against the greenback for the last 4 trading days in New York. We're down about 3% or so against the dollar. What's happening here? I mean, is this a delayed reaction, something that was inevitable when the BOJ began to tighten?
I kind of think it was inevitable because you might be aware of that famous Big Mac index that measures the cost of a McDonald's hamburger around the world. And all the rich countries, obviously, the Big Macs are expensive. And then in the poorer countries, Big Macs are cheap. Well, there was one country for the last couple of years that was just sticking out like a sore thumb, because right at the bottom, with Vietnam and China, was Japan. And it didn't make any sense that a Big Mac should cost the same in Tokyo as it does in Ho Chi Minh City, because people in Japan make 10 times more than people in Vietnam. So I feel it's inevitable. And when you look at the short positions in the yen on the CME, the last time they were this big was in the summer of 2007. There was, in fact, no change in Bank of Japan policy in the summer of 2007, but there was an unwind because the shorts just got so extreme, and that became like a snowball effect, and then dollar-yen started going down. In other words, the yen went up. Well, what we've had this time is a big policy change nobody expected, BOJ hiking by 20 basis points. I'm not surprised the equity market's reacting negatively, because even if Japanese corporates do hedge, they don't hedge for 10 years. They probably hedge 2 or 3 years forward.
But it's a bit formulaic, isn't it, to yen strength, so sell down equity.
I know.
We had the yen here in early April, and we also had the Nikkei pushing up over 41,000. So ultimately, I suppose in time these things get corrected and there's a bit of mean reversion, whatever. Would you be a buyer of Japanese equities here or cautious?
I would be a buyer. I do think that we need to see some fresh forecasts for the dollar yen. I mean, most of them are kind of around 160, 165. We need to see the market pricing in a yen that is no longer just going down and down and down. And I think once that's sort of understood, and I think then the stock market can start to go higher. But the reason that correlation exists is because around 40% of Nikkei revenues are from overseas. But I think, the Bank of Japan probably is pretty happy with the yen around where it is now. They've done what they wanted to do. I don't see them raising rates a whole bunch more going forward.
So let's flip it around very quickly. Last question, Mark. I can give you about 30 seconds. The dollar, its strength. I mean, are the best days for the greenback over, particularly if you're talking about a Fed that is poised to cut?
Well, the opposite side of the coin is once the Fed cuts, that's the green light for all the other central banks to cut too. All the other central banks have been waiting for this to happen. And of course, a couple have gone before, like the Bank of Canada, ECB. And I would say that on balance, if everybody's going to be bringing their rates down, then I don't see why the dollar should just not trade sideways.
All right, Mark, thank you for coming into our studios in Singapore and joining us here live on the program. Mark Matthews, head of Asia Research at Julius Baer.
This has been the Bloomberg Daybreak Asia podcast, bringing you the stories making news and moving markets in the Asia Pacific. Visit the Bloomberg Podcast channel on YouTube to get more episodes of this and other shows from Bloomberg. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.